So hi everyone, it's me, your manuishu, and welcome to my channel, manuishu Acca Classes. So in today's video, we are going to do the last question of the certificate of consolidation. So let's do the question. The question is Liverton and Everpool. Okay, the summarized statement of profit or loss of two companies, Liverton and Everpool, for the year ended 31st May 2006 are provided below. Liverton acquired 3 million ordinary shares in Everpool for 3.5 million. Okay, so it means TP. Okay, let's draw out the first group structure. That is our working one. Working one is our group structure. Oh shit, what I did. Okay. So here, Liverton is parent company. So Liverton acquired. So we don't know the percentage, so we have to calculate. Is there total number of share given of the subsidiary? Okay, let's be. Okay, so Liverton is the parent and subsidiary is Everpool, right? So acquired TPC is given, amount is 35 3500. I have taken 30 common. Okay. Okay, so what is the date of acquisition? Liverton acquired 3 million ordinary shares in Everpool for 3.5 million on 1st June 2004. So date of acquisition is 1 June 2004, right? And what is our reporting date? I have written in the shortcut RD. So reporting date is our 31st May 2006. So time of acquisition is okay. So time of acquisition is almost 2 years. Just wait. May, June, 5, 6. Yeah, it's 2 years. Okay, so no mid-year acquisition case. Then we have given at that time the retained earning of Everpool was were 200,000. It means we have given retained earning at acquisition. Okay, so amount is 200. I have taken 30 as a common. So, and fair value of non-controlling interest in Everpool was 1 million. So, NCI is also given. Fair value of NCI. Fair value of NCI at acquisition. So, amount is, let's take out 30 common. So, we have 1000. Okay, so we have given statement of profit or loss for the year ended 31st May 2006 of the both parent as well as subsidiary. And the following information is also available. Everpool total share capital consists of 4 million ordinary shares of $1 each. So be careful with these nominal values. Sometimes in the question it might be given 0.5. So you have to calculate in that case the number of shares. Just don't get uh, mistake. Just don't do a mistake at this point because it's very important. Okay. So here we have given the number of shares, so we don't have to calculate. So let's calculate what is the percentage acquired by the Liverton. So Liverton has acquired 3,000 shares out of 4,000. So it means 75% share have been acquired by the Liverton. So NCI will be 25%, right? So NCI equal to 25%. So during the year ended 31st March 2006, Liverton sold goods costing 120,000 to Everpool for 200,000. So there have been the intra-group transaction between the parent and subsidiary, and that we need to remove in the case of consolidation, because in the consolidation both company are a single entity from the economic point of view. So legally they are different, but economic point of view they are the single company. So they any kind of intra-group transaction or any current account within this company should be omitted. We need to remove those while we are doing consolidation, right? So what we have to do is Liverton has sold, right? Liverton sold to Everpool. So I have told many times in my video, in case of parent is selling goods to the subsidiary, in that case, we will calculate the POP and that needs to be deducted from the working file. But if the subsidiary is selling goods to the parent, in that case, we have to calculate the POP and that should be deducted from the working to from reporting date, not from the acquisition, from the reporting date. And if all the goods have been sold by the both entity, if there is transaction between these two entities and all the goods have been sold at the year end, in that case, so we don't need to calculate the POP. So be careful with this kind of things. Okay, so on here, parent sold goods to the subsidiary. So during the year ended 31st May 2006, Liverton sold goods costing 120 to Everpool for 200,000. So selling price is 200 and it cost 120 to Liverton. So profit is so profit is 80. So at 31st March 2006, 60% of these goods remain in the Everpool inventory. So unsold goods, let's calculate the POP and just look at the formula bar what I am doing. Just I am taking the 60% of the profit, because just wait. Okay. So this profit is for the 100%, whatever the goods have been bought by the subsidiary from the parent, and out of that 60% is remaining. So we will take the 60% of the profit. The profit is 48. Okay, and I have taken the 30 as a common. You can see here. Okay. Let's move out to the requirement of the question. Complete the following to determine the goodwill on acquisition of the Everpool. Fair value consideration transferred. Okay. So let me copy this here. I will do here. Okay. So tax 1. Okay. So fair value of consideration transferred. So here in question they haven't taken the 30 as a common, so they will write the full amount. We will not take the 30 common. Okay. So what is the amount paid by the Liverton to acquire Everpool? It was 3500123, right? And fair value of NCI interest. Okay, so fair value of NCI, it's already given the question, and amount is, yeah, it's 1 million, 123. Okay, so total will be 450. And fair value of net asset acquired. The first is share capital. I will write in the shortcut. Share capital is already given above. Here you can see in the additional information, it has been told that total share capital consists of 4 million ordinary share of $1 each. So be careful with this nominal value. This is the point where the most of the students do a mistake. So be careful here. So we have, I will write down here. So 4 million multiply by 1, it will be 4 million again. 1, 2, 3. Okay, so next we have retained earnings. It's already given in the question that the retained earning at acquisition is retained earning at acquisition equal to 200,000, right? And then we have total. So total of these two. Okay, so now we will subtract this from this, right? So I will keep minus sign here so that you could figure out. Okay, so now goodwill equal to, so we have 300,000 goodwill. So next requirement is calculate the unrealized profit of Liverton sales to Everpool. We have already calculated it, 48,000, right? Let's move out. Here we have 48. We have already calculated, so it's 48,000. Complete the consolidated statement of profit or loss. Okay, it's quite easy, I think. Okay, so revenue first, then we have cost of sales. I will write in shortcut, okay? Just try to understand. Gross profit. Because in exam, you have already given the format, just you need to put out the value. You don't need to prepare this all kind of format. It's already ready-made given in the exam. So, it's this means distribution cost, and A, administrative expense, PBT, profit before tax. Okay, so next we have tax expense, tax, then we have profit for the year, so I will write profit after tax, and attribution to parent and subsidiary. Okay, so sorry, it's NCI, not subsidiary, non-controlling interest. Okay, so this, I think this is only the requirement of this question. Okay, so let's move to the P&L. It's not a media acquisition case, so we don't have to apportion the item of subsidiary. We can take it out full. Okay, so question I've taken 30 common. Okay, so okay, so revenue. First revenue is 6,400 of Liverton plus 2,600 of Everpool, and we need to minus the intra-group transaction between the parent and subsidiary, which is given in the additional information of point 2, which is for the 200. So we will subtract 200 as well for the intra-group transaction. Okay. Okay. So now cost of sales. In cost of sales, Liverton cost of sales is 3,700, and Everpool cost of sales is 1450. We will subtract 200 for the intra-group transaction, and we will add POP amount, which is 48. Here you just don't get confused whether parent is selling or subsidiary. We need to subtract the POP from the cost of sales. But be careful. Sometimes in exam question might told the POP should be subtracted from the this or this. Sorry, in F7 it might happen. In F3 I don't think this kind of question will be given in the exam. So just subtract it from the cost of sales. Okay, so we have cost of gross profit 3802. Now distribution cost. Distribution cost is okay 490 of the subsidiary, and administrative expenses 700 of parent and 320 of subsidiary. Okay, the profit before tax will be gross profit minus distribution cost and administrative expense. We have a 1192 as a profit before tax. Now we will tax dividend received from the Everpool. So it's also intra-group kind of transaction. So we won't take the dividend received from the Everpool. So this needs to be omitted. And we have a tax expense. Okay, yeah, 400 for the parent and 80 for the subsidiary. So now we have profit after tax. I mean profit for the year is 712. Now in case of attribution, what you need to do is here we will take the subsidiary profit for the year, that is 260, and here you won't subtract the POP because here parent is selling the goods to the subsidiary. If subsidiary is selling goods to the parent, in that case we will subtract the POP from there. But here the parent is selling, so we won't deduct the POP while calculating profit attributable to the NCI. So we simply take the profit of the subsidiary and multiply with the percentage owned by the NCI, that is 25, and it's 65 for the NCI, and for parent it will be okay 647. Okay, so hope you guys understand this video. In case of any confusion, do let me know. I will help you out and try my best to help you out. And so if you are watching my video for the first time, please like and subscribe to my channel and share it among your friends. So for the more updates of my video, so don't forget to hit the bell icon. So thank you so much